Welcome to today's presentation, Expanding Your Shopify Business from Canada to the US. The presentation is for informational purposes only. Please make sure that you communicate with a professional before actually starting the business and establishing the entity. So let's get started with a brief overview of why would you want to expand to the US. Many Canadian entrepreneurs are wondering what will be the recommended business structure to sell via Shopify in the US. Most cross-border e-commerce professionals recommend establishing a US-based business as a C corporation, and often in states like Delaware, Wyoming, or Florida. A C corporation is preferred over an LLC because of more favorable tax treatment under the US-Canada tax treaty, simpler treatment for Canadian tax filing purposes, and the ability to open US bank accounts, obtain a reseller certificate, and integrate easily with Shopify payments, which may require a US entity. So why this is beneficial? Well, there is tax treaty, compliance, banking. Shopify always needs a US entity. So creating a US entity provides access to those platforms, makes it easier for merchant processing with providers like Stripe and PayPal, and enables US warehouses fulfillment providers. The US-Canada tax treaty allows Canadian citizens to avoid double taxation in many cases by claiming a foreign tax credit or exempting certain US sourced income. If you're wondering if you need to purchase a Canadian corporation or do you need a Canadian corporation first, the answer is no. Having a Canadian corporation is not required to start a US business. You may form a US entity directly as an individual. However, if you already operate a Canadian corporation, it may be advantageous to make that entity the owner or the shareholder of your US company for tax planning or liability reasons. Another question that many owners have is, do I need to set up a US corporation if I already have a Canadian one? And the answer is yes, because operating in the US often requires a US legal entity for compliance with tax, sales tax, employment, and banking regulation. Your Canadian corporation can own the US entity or you can hold it personally. Also, you might be wondering, what if you currently have a Canadian corporation with a virtual address? Is it too late to switch to a C corporation? And the response to that is no, it's not too late. If your Canadian corporation holds a US LLC that is causing tax issues, or you started with a less advantageous setup, you can always restructure by forming a C corporation and transferring assets. Many owners of existing businesses are asking questions like, can I use an existing LLC or should I start a new one? And the answer will always be, it depends on how the LLC is structured. If it is a single member LLC owned by a Canadian resident, the IRS treats it as a disregarded entity by default, which can trigger Canadian double taxation. Unless the LLC is taxed as a C corporation, if you filed Form 8832, you are a C corporation. You should be receiving a separate letter that states that. And it may be more beneficial to form a new C corporation to optimize tax treatments and simplify the compliance. But what is the difference between LLC, C Corp, and S Corp? LLC is a flexible structure often used by US residents. For Canadians, it creates double taxation issues because Canada doesn't recognize LLCs as a flow-through entity. C Corporation, on the other hand, is a separate taxable entity that pays US corporate taxes. It allows foreign ownership, and dividends sent to Canada may be subject to withholdings but are generally eligible for foreign tax credit treatment. S Corporation, not available to non-US residents or entities, as shareholders must be US citizens or residents. So do you need an LLC? Not usually. While LLC are popular in the US, Canadian entrepreneurs are typically better served with a C corporation due to the incompatibility of LLC pass-through taxation with Canadian tax rules. LLC can work if properly structured and taxed as a corporation, but this adds a lot more administrative complexity. Let's cover some state formation details now. So many owners are wondering, so which state is most advantageous for setting up my corporation? And Delaware is the default for many due to its strong legal infrastructure and corporate-friendly court system. Wyoming and Florida are also attractive due to low fees, favorable tax treatment, and minimal compliance requirements. However, if you're physically operating, like warehousing, employing people in a particular state, you may need to register there regardless of where the business was incorporated. One of the questions that some of the owners facing is what is the registered agent and why is it necessary? A registered agent is a designated person or service in the U.S. authorized to receive legal and tax documents on your company's behalf. Every state requires one for every business registered in their jurisdiction. Many foreign-owned companies use commercial registered agent services for a small fee. And next question that some of the owners are coming to is why is the state requesting a physical presence and do I need a virtual address? And indeed, some states require a physical address to confirm legal presence, especially for sales tax registration and certain business licenses. A virtual office or business mailing address in your incorporation state is often sufficient, but this varies especially if you have economic nexus or warehouse inventory in other states. All right, let's move forward to tax and compliance topic. Many owners are concerned about double taxation and tax treaty between US and Canada. Again, keep in mind that this presentation is for informational purposes only. Oftentimes, we are asked the question, will I face double taxation and how does the US-Canada tax treaty mitigate this? Without proper planning, yes, you might face double taxation, but tax treaty between Canada and US allows for foreign tax credits and treaty-based exemption. For example, US taxes paid by a C corporation can be credited against Canadian taxes when dividends are repatriated. Key tools include the foreign tax credit and tax treaty article provisions. LLCs, however, often cause problems due to mismatch in entity classifications. Some forms like CRA Form T2209 and Article X provisions should be used when filing tax returns and should be considered when you are forming the entity. If you are new to sales and you're opening just your first Shopify store, you might not be familiar with the term resale certificate, so you don't know what that is and is it required in all the states where you conduct the business. So resale certificate allows you to buy goods tax-free from suppliers if you are reselling them. It's required in states where you maintain a sales tax nexus, physical or economic. Each state has its own rules and forms, and many require you to register for sales tax permit first. Let's get to the fun part. What is the economic nexus and how does it affect my sales tax obligation? That's a great question and it's really important to know all about it. Economic nexus refers to a sales tax obligation triggered not by physical presence, but by the sales volume or transaction count in a given state. For example, making over $100,000 in sales or 200 transactions in a state may require you to collect and remit sales tax there, even if you're based in Canada. Next topic and question that interests most of the owners is, how does the United States Mexico-Canada agreement impact my e-commerce operations? Basically, it has streamlined custom processes, increased duty-free thresholds for cross-border shipments, and improved IP projections. It benefits e-commerce by reducing friction on low-value shipment, like under $800 to the US, and provides a stable legal framework for digital trade and intellectual property enforcement. But keep in mind the changes are constantly taking place in the US tax laws, and check with tax professional on this, as agreement might have changed between the time this response is given and you actually taking an action. All right, let's move forward to banking and financial operations. Many owners are wondering how can they open a business bank account within the US as a non-resident. And to open a US business bank account, you typically will need a US business entity, an EIN from the IRS, and the US mailing address. Some banks allow remote account setup, but most will require you an in-person visit. Alternatively, you can utilize fintech platforms like Mercury or Wise Business that offer US-based accounts for foreign founders without needing a visit. Another great question that many Canadian business owners ask is, can I accept payments in both US dollars and Canadian dollars on my Shopify store? Absolutely. Shopify payments and third-party gateways like Stripe allow multi-currency processing, and you can set up your store to display prices in local currencies and receive payouts in either Canadian dollars or USD. Depending on your banking setup and Shopify settings, that is achievable. Next very important question is legal and compliance considerations, and there are quite a few questions that people are asking. One of those questions is, what are the ongoing compliance requirements for maintaining a US corporation as a Canadian owner? And there are a couple of items that you will need to be aware of. Is first, you will need to file an annual report with the state of incorporation. That report is filed on the annual basis, so it's not just once and forgotten, but every year while the company is in existence, you will need to file that annual report. In addition, annually you will need to file IRS Form 1120, which is U.S. corporate income tax return. You will need to maintain a registered agent, and in some instances you might need to file Form 5472 if owned 25% or more by a foreign person entity. You possibly might need to file state income tax and franchise tax returns, depending on where you operate and what are you doing. Non-compliance definitely can lead to penalties and dissolutions of your entity, and we're here to help and prevent all of those issues. Another very important question that many owners are asking is, do I need business insurance for my US corporation? The response is yes, if you want to mitigate potential liabilities. Depending on your operations and considering general liability, product liability, cyber liability, and commercial property insurance, US contracts may also require some proof of coverage. So definitely please consider business insurance for your company. Many business owners are worried about their intellectual property protection, and the main question for them is, should they trademark the brand in the US? And the answer is definitely yes, especially if you are selling into US market. Our US federal trademark protects your brand against infringement, gives you access to Amazon brand registry, and gives you legal recourse in federal courts. You can file via uspto.gov or through an attorney, so that's something, if you're considering, that might be helpful. As business is growing and becomes more profitable, you might be considering hiring US-based staff. So, and definitely have questions about employment and staffing. And one of the questions that we're getting asked a lot is, can I hire US-based employees or contractors for my US corporation? Definitely. As a US entity, you can hire staff and contractors regardless of the owner's residency. And for the employees, you must register with the IRS and state tax agencies to withhold payroll taxes and file W-2s in January of each year. And for independent contractors, you will need to file Form 1099 if they are paid more than $600 a year. Keep in mind that for independent contractors, you also need to collect Form W-9 to make sure that you have your contractors' correct names. If it's an entity, then business name, social security, and EIN numbers, depending on whether you hire a person or you hire an entity, and their full address. It is recommended that you're collecting that information prior to hiring or during the process of hiring, and keep it until the filing requirement in January of each year. Next couple of slides will cover entrepreneur visa overview. It's a general information, so please consult your attorney or a legal counsel in regards of how to obtain the visa and what to do in regards of that. One of the options that are available for Canadian entrepreneurs is E2 Treaty Investor Visa. And what is it? Usually it's a visa that has some key requirements that must be met. It is required substantial at-risk investment in real and operating U.S. business. You must have at least 50% ownership in the company. And as an applicant, you must direct and develop the enterprise. The funds must not be marginal and support business and ideally create U.S. jobs. Is there a minimum investment amount required for the E2 visa? Of course it is, but it's not a statutory minimum. In practice, the investments show that about $100,000 are often expected. This amount must be proportional to the cost of the business. And can you start a new business or must you purchase an existing one for E2 visa? And basically it is your choice, but starting a new business is most common, and you must show operational plans, investment of funds, and a credible path to revenue. Buying an existing business may make it easier to prove viability and job creation. Another option is the L1 visa for expanding a Canadian business into a US subsidiary. Both allow work authorization and renewability. So how does L1 intercompany transfer visa work for Canadian business owners? Well, basically it allows Canadian business owner or executive to transfer to US branch, affiliate, or subsidiary they've set up. The applicant must have worked for the Canadian company for at least 1 year in the past 3 years and be taking on a managerial executive role in the US. Many owners are asking if there are any visa options under CU-SMA, formerly known as NAFTA, for Canadian entrepreneurs. And CU-SMA provides streamlined entry for business visitors and certain professionals under temporary visa. While it is not suited for ownership, it allows temporary work visit for eligible occupations like engineers, accountants, or IT professionals. And the last but not the least question that interests a lot of owners is there a path to a green card? Can owning a US business lead to permanent residency? And the answer is it depends. Owning business alone does not guarantee a green card, but it can support immigration petitions, and EB-5 immigration investor program is the most direct route for the investor-based permanent residency, and it does require significant investment, anywhere between $800,000 to $1 million in job creations. That being said, all of this information again in this presentation is subject to change based on the executive orders of our president. And before you are getting your business set up, please make sure that you review the guidance or consult with the tax and legal professionals.